I'm going to go now to the bank statement loan.
Okay.
Most of you are familiar with the bank statement program. These are designed for self-employed borrowers who have an active and income-producing business here in the United States. Because I get calls all the time, Blanche, they own a business in England or in Germany. Can I do a bank statement loan since they're here now? No, it has to be a U.S. business.
Okay.
Okay. So what happens to a self-employed borrower when they file taxes?
Tell me.
They write off a lot.
Expenses.
A lot of expenses, correct. Now, they write off a lot of expenses to create more jobs, right? To create more opportunities.
I like the way you express it. That's exactly right.
Correct.
Yeah.
Correct.
Yeah.
So
you don't pay IRS, you pay employers.
correct.
Employees.
Yes, yes.
I like this point of view.
Now, when you look at their tax returns, they'll tell you, oh, I made $500,000 last year, but the bottom line, 50,000
Yeah, okay, so you like
or
it.
100,000.
Yes.
So we want to make sure that that borrower is not underserved.
Okay.
That's why we have the bank statement program. So what we do with the bank statement program is we collect 12 or 24 months of bank statements. We look at their deposits, we look at their cash flow. So let's say the cash flow on a restaurant is $200,000 a month. Okay, we would apply an expense factor to to those deposits, 50%. So imagine
50% is a lot.
It's everyone 50.
everyone is, yeah, the 50,
Well,
that's the
it's
standard.
good to know, but okay, it's
Correct.
finally I learned something.
Now,
All right.
it's different. Now, we have several expense factors. So here's a good example. You have an independent contractor that works from home, no employees, no storefront, doesn't drive around, just sits at home, does,
I mean,
computer work.
contractor, yes.
Correct.
Okay.
That borrower's expense factor is 20% or even 10%.
So now it's industry defines it. How do you know?
This industry aligned. So if anytime you rent space or you have employees, we know there's expenses there. So it's an automatic 50%.
I see. Okay, so now it's if you just work from home, doesn't matter what. You're working like I was reading today about Tesla wants to bring people to office spaces, and there's a debate. People don't want to go to office spaces. So it's like here, people don't work here anymore. I mean, just come here to see you. That's the only reason. No, but point is that when people work from homes, then the factor is maybe 20%.
10 or 20%.
Do you need any letter from CPA or tax preparer about the factor? Because sometimes lenders ask for that.
No, initially no. So if you can provide a business license or
How about what if there are no business license? It's just some, let's say, computer consultant, yes.
Yeah.
Do they
then
need?
yes, we would need an tax prepared letter or CPA letter stating that they're self-employed.
I see. Okay, simple. Just stating
Just
that says
simple.
self-employed.
Correct.
Okay, very
Okay.
good. All right.
The bank statement program is available for all programs. So that would be purchase, rate and term, and cash out, and primary, second home, and investment properties.
Okay.
We require the borrower to be at least self-employed for 2 years, but we will make exceptions.
So, okay.
Okay.
So, how do you define because they're just stating, you don't have, you using if in this case, do you still need 24 months bank statements or 12 months bank statements?
You decide.
Different program.
Different program.
Different programs. Okay.
So here's a good example for that, Manny. So I can look at both. I can look at 24 and I can look at 12. But I would rather you give me 24 because if we could see that there's more income in the last 12 months for qualification, then we'll use 12. Right?
Yeah.
If 2021 was not so good year, and it drags down the income, then I would just go with 12 instead of 24. So you have
see,
that
okay.
option.
So we are actually, when we underwrite the file, we have to ask for more documentation and then decide which one is right.
Correct.
Yeah.
But we actually do the calculation for you before submission.
I see. So now it's, and whom we send to you, whatever we have.
Correct.
You are going to contact person.
Yes.
So now it's, you gather basic information and then we send to you and you say, okay, based on what I see, we can do it. And since you have a lot of experience, including underwriting experience personally, you know how to look at numbers.
Correct. So I don't actually do the income calculation. We
Oh.
have a review team that does it.
I see.
Because a majority of our business is bank statements, we've formed a review team that will actually go through all the deposits.
I see.
Okay.
Okay.
And then what we do is you fill out a business narrative.
Yes.
You send that to me with the bank statements.
Yes.
And then when it's done, I will send you an income worksheet.
Yeah.
Okay.
Okay. Perfect.
Which tells you exactly how much their monthly income is, and that is the income that you plug into your
So
application.
basically, what we are the document gatherers, but we have to underwrite the file, of course.
Yes.
I do my own calculation, and what you said helps me to understand how to do it.
Correct.
Okay.
Correct.
Let's move forward.
Okay.
What next program will you talk about?
Okay. So the program that I want to talk about next is our Flex Connect program.
Flex Connect.
Flex Connect.
Yeah, see it here.
So I have a question for all of you. When you get an application conforming loan, what's the first thing that you do? Aside from gathering documents, you run
The first thing I check.
DU? Do you guys run DU?
No, GU it's like additional step. As soon we're gonna get application, we're gonna check documentation and they qualify. If it's like simple file, run credit report because we just.
The first thing is run credit report.
Yes.
Okay.
Okay.
So what do you want to say?
Okay. So we have a program that will actually use DU findings to originate a non-QM loan.
No QM
So-
even.
Yes, non-QM.
Interesting.
So 99% of the time, non-QM loans are manually underwritten because
Yes.
there's so many
Nuances.
there's so many nuances,
Yeah.
so many things going on in a file. But exclusive to ClearEdge is the Flex Connect program.
Okay.
So there are certain limitations here. The max LTV is 80%. The minimum credit score is 640. And if you get an approved eligible or an approved ineligible based on loan amount, we will follow your DU findings. So if it says no reserves, I don't ask for reserves. If it says 100% gift, I'll take it. Whatever DU says, we follow. And this makes our underwriter's job so easy because it's within the program guidelines and they don't have to ask for additional
Okay.
information.
Is this a little bit confusing? Because in my mind, DU is strictly associated with Fannie Mae.
Correct.
So what it has to do with this?
Well, this is our program.
So now you're using a DU technology,
Correct.
but it's not Fannie Mae loan.
No,
You're just using automatic underwriting because DU stands for what?
desktop underwriting.
Okay.
Correct.
So basically, it's a term which was created by Fannie Mae and LP is for Freddie Mac. But you're using this idea to underwrite those loans through.
Correct.
Wow.
Yes.
So what you're saying is if we will submit loan and you run it through DU,
No, you run it.
we run through your DU.
No, you can run it with any lender or if you have DO.
No,
desktop
I know.
originator.
That's DO. It will be not DU. So, but then if we will run it through our system and we'll give you the file with our findings,
Yes.
you just follow. There's no override, nothing. Just whatever it is. I think it's good.
Yes.
Yeah. Okay.
Yes, it's very good
All right.
because in some situations, most non-QM lenders will require the borrower to have some kind of money, right? 5% of their own funds
Yeah.
on a purchase, normally 3 to 6 months reserves. If you run DU and it doesn't ask you for any of that, then we won't ask for any of it. Whatever, basically it's set in stone. Whatever findings you get is what we follow.
Yeah,
Okay.
that's interesting. But nevertheless, when you say that we are running it, so we have to run through your system.
We don't know. You can
No,
run
no,
it
no.
with any lender.
But any lender then is going to be Fannie Mae.
Correct.
Fannie Mae.
Yes, that's what I'm looking for.
So now we submit loans through any DOP system, and we will whatever finding it does. But doesn't this DU underwrites based on information we put in?
Yes.
And if it's no QM loans, there's certain information we do not put in. It's a little bit confusing for me.
So here's a good example. Let's say you have a borrower where you want to use bank statement income and you want to use the Flex program.
Yes.
Okay. So the first thing that you do is you send me the bank statements.
Yes.
We will get the income analyzed.
Yes.
I will give you the monthly income. Let's say
Yes.
the monthly income is
Okay.
100,000
Based on your analysis.
based on my analysis. So you plug in 100,000 into your LOS, to your point.
Oh, I see.
And then you run DU, whether it's DO or DU with another lender.
Yes.
You get your approved, eligible or ineligible,
Uh-huh.
and then you submit the loan to me. Whatever the finding says, I will accept it.
Okay.
Yes.
And if it DSCR?
DSCR, no.
So in other words, it's only basically for owner-occupied properties.
Correct. Owner occupied. Well, actually, this is for all non-QM. So we could do this on
Investment
primary,
properties.
second homes, and investments.
I see. In other words, it just it doesn't fit a DSCR, but other programs or other definitions. Perfect.
Correct.
This is something new for me, for sure.
I have been able to save a lot of loans
Yeah, just doing this way.
just doing this because on $1 million loan, we'll ask for 6 months reserves.
Yes.
And I'll tell the broker, can you run DU and just see,
Uh-huh.
If you can get
Just,
finding that says no
Yeah,
reserves.
yeah. This brings to mind something else because I yell and scream that sometimes real estate agents don't hear it. Give me your clients before you start looking for property.
Correct.
Because they refer me client when it's just making an offer. Say, can you give me a pre-approval? When I have time, I need time for that.
Yes.
So now it's if you have a client before, I can prepare it. I know what to do as a client. And then only then the real estate agents can look for a property.
Correct.
I'll stop you here because we covered a lot of grounds. Juan, can you do us a favor and act as director of photography and press the button? Thank you very much. One second. My name is Manny Kagan, and I promise to help you. Thank you.